Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It's May 2nd. This will be our chart lesson for. And today was an FOMC day, so you needed to. This area right in here is where you needed to kind of sit on the sidelines. It really didn't have a big effect today. We moved down pretty quickly. Right in here is where it hit 1 o'clock somewhere up here, right off the highs of the overnight. And we shot straight back down like we were still going to stay in the trading range. We really were in a trading range, and it was really tight early on. So you had to be really careful trading this. There's a few trades in there, but then of course we bounced and we're headed higher. I didn't really mark anything after 12 o'clock on up into right in and just into the 1 o'clock hour. About looks like once we got back about 1:30 or so, it was starting to kind of look normal again, and you had a little trend line. So by the time I marked these trades, everything was looking relatively normal again. So but early on it was definitely a range. Here's your overnight lows, here's your overnight highs, and we pretty much traded. We had a little failed break lower here, and the lows just kind of moved down a little bit as the day kind of went on, and we actually had another failure down here too. But I didn't see a setup I liked here. You really had to wait on this second entry up here. So but anyway, we'll talk about all that. Let me back out here where we can see it a little better, and we'll talk about the trades, and we'll go from there. But we had a nice setup right here at the 7 o'clock hour this morning. Notice we were working up, and we just made a double top, and we get a break right here of the trend line. First entry, then we pull back. We actually go through the EMA. We actually went through on that first move. That's a little telling there. And then you get that second entry long, and it fails instantly. And so I like going short right there. And that turns out to be a nice trade. And you can see that negative signal bar. That's why I don't like going long above a bearish signal bar, because that would have kept you out of that second entry long, because we don't have a new high yet. And if that had been a bullish one, I'd take that trade. But because it's bearish, I didn't get trapped to the long side, and I went short instead. And look at that nice move down. And I would have at least measured that and expected probably a measured move. And you can see we got a little bit further than that, and we kind of got hung up. But I drew this trend line. Actually, I found this. I can't remember how I found this trend. I must have just drawn it off these two highs. I was thinking I drew this off the lows, but I don't think I did. I think I drew this just off those first two swings, and notice I didn't really mark it until we confirmed it here. That's actually what I did was I added on this part right here, and then I ended up, it looked like it was maybe a spiking channel, but turns out that there's just a two-tier channel, so I think that's how I got this lower side. But anyway, that turns out to be a nice trade. If you catch that, you can ride this all the way to the lows. You definitely would have had a runner there. And then we kind of just going sideways, but there's a failed second entry long here, but we're not back to the EMA. It would have worked, and you probably could have taken this, and there are two legs down. So I didn't mark this one just because we were not back to the EMA, not back to the trend line. But sometimes that doesn't matter, because you get pretty much two measured legs down here, and you actually got two legs in this move. And if you measure them, you can see we've got, again, almost two measured legs. And generally when it turns down again like that, that's probably going to trap people. So I should at least make that one green, because if it is going to be a range day, of course we don't have a whole lot of price action here yet that's printed, so you don't know for sure it's going to be a range day, but it sure looks like one. And that's all you got to go on at that point. So you figure we're probably going here, so you may take that trade. And it would have worked either way, but I'm going to leave it green instead of making that one red, because I just wasn't, there's something I didn't like about it. There's really not enough room to get out before here. It didn't matter because it pushed on down, but there really wasn't enough room to get out here, although this was the one that's the most critical anyway. So something to think about. So I drew the trend line off these first two swings. And notice we're just kind of going sideways. A lot of congestion there, but then we get a little breakout pullback short that pulls back, confirms that trend line, gives you a big bearish bar. That's where you want to go short next, and hopefully we'll ride all the way down. And it actually gives you one more attempt to come up, and this is a double top, so that's a failed second entry long, again off the trend line. Key entry point, another nice bearish bar, and it quickly drops down and tests the overnight lows. Originally I had this a little lower, but after we started making all these higher touches, I adjusted it later in the day. So, but early on, you might have had it down here, or you might have even had it. Usually, if you have like a lower high here and one, that's where I usually start until you get a little more price action. Then I kind of moved it down, but then I brought it back again. So that's where I would have it at this point. And you've had a couple of nice entries right off that trend line coming down. And somebody else asked me about there's been some talk about the signal bars. My personal opinion is you want the signal bar to be bearish if you're going short. You want it to be bullish if you're going long, unless there's a trap. There's a trap, it doesn't matter. And a lot of times it's even better if you're going short, if it's a bullish trap, bar on the trap, or if you're going long, that it's a bearish bar on the trap, because that tends to trap more people. So, but outside of that, I'm always going to follow the rule of filtering. It doesn't always have to be 100% perfectly bearish. Like notice there's a little bit of stem there, there's a tick of stem there, and sometimes like even this one maybe a couple, but it's still more bearish than it is bullish. I can live with that if like this is basically a double test or a failed second entry long, but generally I like that bar to be bearish. And somebody else asked me, yesterday we had a few setups here where the bar was real bullish right off the key entry point. And that'll happen sometimes, and you'll miss some trades that'll go, and you'll have to say, hey, I missed one. But it's my experience that you will filter yourself out of more bad trades than you will out of good trades by making sure the signal bar, if you're going short, you got a bearish signal bar, and if you're going long, you got a bullish signal bar. So, do your research, check it out for yourself, and go with your own gut feel. But that's my opinion, and I'm sticking to that. I'm not changing that, because after 15 years of doing this, that's been my experience, and I'm sticking to that rule. If you want to adjust it, feel free to. I'm telling you, we've got this down to a science though, and I don't like monkeying with the rules and changing things. So, but like I said, you do your research and you play it how you want to play it, and I'll leave it at that. But anyway, two nice trades there. Moves us down to the low. Looks like we're trying to get a bounce here. That's the first break outside of that, and we're not quite to the lows yet. So when we got that second entry short right there, I like that one. Just enough to get out. It comes back again and gives you a lower high and another big bearish bar. But I'm not as crazy about that one because now you've bounced here twice, and your closes at that point are right there, and you don't necessarily have enough room right here to get out. And so I'm a little concerned about that one. I did mark it green because it still fits a lot of our criteria. It's a nice bearish bar, but you just have to be careful with that one. And it got it got exactly enough ticks to scalp out, and then it bounced, and it would have stopped you out. So you couldn't. What you might do with this one is let it break lower and drop a limit order or a tick or two back just to give yourself a little more room, and that would have worked on this trade. But still, even if you went short one tick below it, you still would have gotten out okay. But next time you may not, so you got to be really careful with that trade. And then we pulled back again, and it ticked a little bit higher in that double top and then turned down. We bounced here so many times, I didn't like going short anymore. There's a lot of stem right there, so I don't like that one. We come down and we actually break lower and make a new low now. So now you've got a close outside and a new low. So we could bounce now. So you want to be on the lookout or aware of a possible bounce. But a correction could just mean you go sideways. And a lot of times on FOMC days, you do go sideways for quite a bit because people are waiting on that news to come out. And they don't want to commit to one direction or the other. But notice what happens. You got your low here. You got that failed break lower. So you shoot right through, pull back. You got a lower high here. But again, at that point, this line was way down here. And you do not have enough room to get out. So I'm going to wait on the reversal pattern. And notice how it pushes on up. So then you can move it on up. Eventually, it moved on up to here. Get more closes and touches right there. But so I like it, so it actually pushed on through these highs, and so and pulled back, and you get that failed second entry short. And notice that one does have kind of a more bearish tone to it, but I like going long above that one on the trap, and it's a quick, relatively easy scalp, but you don't get anything more out of it. And you just kind of get stuck up here, and your resistance just moves up a notch, basically, or two. And you got a second entry short here, but again, notice that low, first entry, second entry is right off the highs where you would expect a key entry point. But look what happened if you go short there. Actually, you would not have gotten stopped out if you put your stop where it belonged. But most people aren't going to ride that out consistently sideways and watch it bouncing off this right at your about to stop you out, you know, for 2 or 3 minutes each time before they exit. So plus, you should be looking for prices to go lower anyway, but you don't want to risk getting stopped out there. And then you get to double test. You could treat that like there's a new high, first entry, second entry, fails, and so I like going short now just to ride it back to the other side. That's where it goes. Again, you got a lower high right here, but it's right back into those lows, and look how bullish that bar is. It would have worked, but you don't know that. So, because you bounced here the last 2 times, so you can't risk that. So then it bounces, and you just kind of get stuck here, and you really don't get a good setup either way to go short or long here. And so I like just sitting tight until finally you push up a little bit higher. Notice where all the closes have been, and you finally you're making starting right here. You start making higher lows and higher highs, and then you make a double bottom, and you get that little trap again. That's a huge bar. It is right back into these highs, but you got that little trap there, and we are making higher highs here again. And so you may risk that one. You might let it break higher, but you're still going to have a big bar. So I'm not crazy about that one, but it does fit the double test rule. You tested it twice. You got a bullish bar. If you're looking at the original highs, you got room to get out, and you may catch an important low here since we broke lower a couple of times and we're still making higher lows, and you get that one little tick lower below that double bottom. So you might risk that one. And then of course now you fell out the top side. Generally you want to wait on a lower high, but being that far away from the EMA and having a relatively small bar right there, you might risk just going ahead and entering that one. I marked it green for that reason. But you do get a lower high right here, and again, another small bar, relatively bearish. You're still away from the EMA. It didn't tick higher, but it's still, notice that new low, first entry, second entry, still a lower high and a second entry short, a good ways away from the EMA on a failed break higher. And if you take that one, you get another good entry here. And it runs all the way down. We actually make a new low out the other side now. And a lot of times that's generally what it'll take to push through one side or the other, is a failure out one side. And notice we had to fail out this side twice before we broke through. And then once we broke through here, we were able to fail out the low side. And notice it breaks through, but it does fail quickly and reverses. There's a lower high right here, and it's a fairly bullish bar. But you got that trend line working down, and we could hit that trend line and turn down. So I'm skipping that one and wait and see what happens, because generally you're going to fail, but you just never know with that trend line. It may push down again, so you just need to wait. And it pushes right on through, and it goes right through the EMA. And notice that's basically a double bottom. So you get a first entry and then a second entry. It fails. I wasn't sure about this one because if this is the trend line, you got to close outside, but you still got plenty of room to get out. And we're still kind of bouncing along this line here. So we're probably going to try to make a new high either way. So you might enter there. But another thing too, it's real close to, this is like within 10 or 12 minutes of the noon hour. So you got to be real careful about that. But it's a second entry long, and you can count it as a failed second entry short as well. So you might enter there. Notice again, you get that little trap and it takes off, but that's right into the 12 o'clock hour. Again, you might say, hey, I've got an hour to get out, but you got to be really careful about that stuff. Normally, I probably would have marked that one blue because it actually went lower and then turns and goes out the upper side. But it's so close to that 12 o'clock hour, you just need to be real careful. And I wouldn't take anything in here. There's some setups in there, but I wouldn't take them because of what's going on. Wouldn't take any of this right here because that's just right at the 1 o'clock news hour. And then we move up. You actually get a second entry right here. I don't know if that broke higher or went lower first, so I'm not sure about that one. If you were trading during that hour, you would probably know if your chart looks similar to mine, but I'm not sure. I'd probably wait to get this trend line confirmed because we're back through the EMA. I wouldn't go long there, but I probably wouldn't go short right there either, even though it's a lower high. And you really, technically, I mean, it's not really a failed second entry short because that's a pretty good move there, but it's close. And so, and it is a second entry short, but I'm not convinced that, notice this is the first break of this channel and we don't have a new high yet. So I think you just need to sit tight and you draw your trend line right there and you're moving down. You get a first entry long, second entry long, and that's close to the trend line, but it's not exactly on it. So you may just wait. Depends on, you really don't know exactly where that is, but if you use that close off the high right there, I think I had it a little steeper at one time, but I adjusted it a little bit later based on the way it fit off the lows and so forth. And you probably could still make that a little bit flatter than what it is, and it still will fit okay. But I tried to use these first few swings here. But regardless, that's a failed second entry long, and you did push a little bit lower here before you came back. And so it's a breakout pullback short, but it's 2 tries to go higher. It's right at the EMA. It's very close to what looks like is possible trend line to confirm it. I like that one. It does come back and make another lower high and gives you a second entry short. Notice that low, first entry, second entry, and notice how we're making lower highs every time. Another nice bearish bar. I like going short there. And that gets you into the 2 o'clock hour. And if you took that trade right there, you could have got several points out of that before it bounced. It would have come back and got you a break even on that one, unfortunately. But you still would have had several points here. I think that's probably 4 or 5 points from here to there, something like that. But it wasn't a bad day. It got a little tricky right in here. It was fairly straightforward to about here, and then it got a little tricky in here. You had to kind of play the range, and so you just had to kind of sit tight, and then you had a couple of nice trades late in the afternoon. And this was a really nice sell-off. But I probably wouldn't have had a problem going short here on that big bearish bar. It actually broke higher and then turns. It didn't go out the other side, but it's still really bearish, and it's just after 2 o'clock. So since you kind of had to lose about an hour of trading or more today, you might go short right there. And that's really, even though you made a lower low there, that's 2 legs back to the EMA with a big bearish bar. So I'll mark that one just in case anybody was curious about it. But that's what I saw today. And it wasn't the best day ever, but it wasn't a bad day either. Still a chance to make some pretty good money. So, but anyway, I'm going to wrap it up for today. We'll be back again tomorrow to wrap up our week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.